Wall Street indexes recovered yesterday as investors anticipated upbeat corporate reports and the US NONFARM payrolls. Amid a steady rally, their three major stock indexes went sharply up, and Nasdaq closed with the biggest gain. Friday is full of a high-impact news which has caught investors off guard. You're watching a tele-review of the US markets with me, Ekaterina Stikhina. Yesterday, the benchmark stock indexes regained some of Wednesday's losses. The S&P 500 grew by 0.25% to close at 4,906 points. The US stock market extended its growth, driven by optimism. Futures on the stock indexes added 0.5 and 1% before the NONFARM payrolls. The indexes moderated their growth after the data release. The S&P 500 is expected to trade in the intraday corridor between 4,888 and 4,941. Yesterday, an increase in initial unemployment claims gave a fresh evidence that the labor market is getting soft. The Federal Reserve used this softness as the condition to ensure a steady slowdown in economic growth. In this context, the major stock indexes grew on the back of the weekly update on jobless claims and in anticipation of quarterly reports from the heavyweights such as Meta, Amazon, and Apple. High-tech stocks traded mixed. The banking sector put pressure on the stock market. The NONFARM payrolls were a cold shower for those who believed that the labor market was cooling down. In fact, the US economy added 353,000 jobs in January, up from 333,000 in December. The figure was almost double the market forecast for employment growth of 180,000. Job increases were recorded in professional and business services, healthcare, retail trade, and social assistance. On the other hand, the mining and oil and gas industries lost 5,000 jobs. In addition, a separate report showed that the US unemployment rate remained unchanged at 3.7% in January, below the market consensus of 3.8%. As you understand, in such conditions, the deadline for an early Fed rate cut is once postponed. The stock market reaction to the data was muted amid the rise of high-tech stocks. But the rally may soon frizzle out as the oil giants ExxonMobil and Chevron are going through troubled times in terms of profits because commodities are in turmoil. Today, the US dollar index rebounded from a weekly low. The index was losing ground for the most part of the day against major currencies, and the instrument slipped to 102.9, being on track to a weekly loss. However, the strong NONFARM payrolls gave it fresh impetus, so the US dollar index rebounded to 103.60, and the intraday corridor for the index is seen between 103.40 and 104.10. The greenback suffered a decline in the US Treasuries and worries about the health of the domestic banking sector. The red-hot NONFARM payrolls revived confident growth of the US dollar. The labor market, cornerstone of Wall Street and a critical barometer for the Federal Reserve, remains strong. In tandem with the strong economy, this allows the US Central Bank to take its time with the easing and wait for clear signals of a cooling in inflation. Amid such fundamentals, the dollar has bullish prospects, but they are more about stability than about sharp growth. Based on the Fed signals, monetary easing look inevitable today, although it may be delayed further in a time than the market expects. No surprise, the Canadian dollar is weakening today against the firm US dollar in light of the official employment data. The USD pair jumped by 0.38% to trade at 1.3434, and the instrument is likely to trade today in between 1.3410 and 1.3471. The US dollar's rally did not allow the loonie to strengthen, although for most of the day the loonie, like most of its counterparts, was growing against the American currency, and the situation with the Canadian dollar is aggravated by losses in the oil market. Crude oil prices are on a track for a weekly decline of about 5%, and the crypto market opened February on a positive note and tried to remain optimistic on Friday. Popular crypto assets traded mostly in the green, with the Bitcoin hovering just above $43,000. However, employment in the US was reflected in the popular tokens, pushing Bitcoin down to 42,600. In fact, the crypto market, despite a wide range of fluctuations, is trading sideways. The basic trading range for Bitcoin suggests fluctuations within the range of $42,500 to $43,700, and the next support levels are $41,900 and $40,000. Resistance is between $44,500 and $46,100. Our review of American markets is over. Subscribe to InstaForex TV channel, and we will keep you updated on the daily market developments. Financial markets offer ample trading opportunities. Good luck, and see you online on Monday.